You know what time it is. It's crypto time. Welcome everyone back into Crypto's News, where we cover what is happening in cryptocurrency today. Cover pretty much the most important things to make sure you stay on top of things. So we're just going to dive right in today. I don't want to take up too much of your time, but a special thank you to those of you who are joining me live and those of you who check out this content day in, day out. I know you have a lot of choices for where you check out your crypto news, but I appreciate you being here. So let's go ahead and take a look at the prices to start off, where you have Bitcoin up 1.1% in a remarkable turnaround after quite a dip earlier on. It actually dropped below $19,000 and now it's almost back up to 20,000 and 19,422. You have Ethereum sitting at 1,294. It's down 0.5%, so it hasn't fully recovered over the last 24 hours, but it's pretty much there. I guess you could say that's pretty much flat. So what drove this price action today that was devastating to traders trying to leverage trade around this, especially, was release of the CPI, the Consumer Price Index. It was a little bit hotter, depending how you're looking at it, than expected. And that is what led people to believe the Fed is going to have to continue to hike rates. That's pretty much the story across the board. So as it says here, released by the U.S. Bureau of Labor Statistics, the Consumer Price Index for all urban consumers rose 0.4% in September on a seasonally adjusted basis after rising 0.1% in August. The U.S. Bureau of Labor Statistics reported today, over the last 12 months, the all items index increased 8.2% before seasonal adjustment. So this is excluding things like gas and food, things that don't really matter, right, in all of our lives, which is why I really appreciate this little meme here put up by Bitcoin Magazine. US CPI inflation, 8.2%. We were expecting 8.1%. So again, hotter than expected. Food at home inflation, 13%. So yeah, it's still devastating to the consumer pocket, either way you look at it. So this resulted in a huge amount of liquidations across the board. Whether you were long or short, it was really difficult to trade around this. As it says here on this daily HODL headline, over $256 million in Bitcoin and crypto liquidated as U.S. inflation report triggers flash crash. So what did that flash crash look like? It was extreme, as Lex Moskovsky here wrote on Twitter. Bitcoin reacts at once to the hot CPI, although it's now recovering. And that's kind of what wrecked, you might have been short and you were doing quite well. You're like, this is great. I managed to time this right. And then boom, it spiked right back up. So this is what we're talking about with volatility and just very dangerous time to be kind of trading. It doesn't, I mean, I don't know. Maybe if you're trading options, it might be better off for you. But trying to just trade some sort of perpetual contract is probably going to get you on that list of people getting wrecked. So ultrasound.money, I just wanted to take a look at that. Check out how much ETH has been burned. Only 6,912 ETH has been burned. I'm sorry, has been created, supply chain increase since the merge. Check how much it would have been with proof of work had we not done the merge. 346,492, again, relative to only about 7,000 ETH. And you can also check that out here on the right. If you look in the orange, this is the yearly increase in issuance for Bitcoin. Orange coin, and you have here ETH proof of work up 3.66% over the year. It would have been 1.72% for Bitcoin, and trending south here with Ethereum post merge at only 0.07%. Although if the trend continues, that could be getting better. For some reason, after all this liquidation that happened today and the trading volume increase that we had, there were a lot of fees being sold. And this resulted in even more ETH being burnt. And this is as some of the excitement around that Zen token that I talked about recently, XEN, as that died away somewhat, we're still seeing that we are negative. Take a look at the 5-minute time frame. We're down 0.04%. 1 hour time frame, we're negative 0.09% for the year. The daily time frame, negative 0.18%. Over the last 7 days, we're negative 0.2%. And then, yeah, over the last 30 days, we're still trending positive. But things are looking quite good in the shorter term when it comes to burning. And we're still in that bear market, whatever you want to call it, the burr market, the winter, whatever you guys want to call it. Either way, it's a burn market for Ethereum. So Binance has burned as many BNB tokens as hacker minted from thin air. This is a headline on decrypt.co. So there was this bridge hack that took place that we covered here on the show, which resulted in a freezing of the BSC chain, which all the validators were called up in a hurry. CZ, the CEO of Binance, was sleeping, but when he woke up, he was like, oh, wow. My centralized cartel managed to get everything fixed without me. Nice. I'm just joking. But no, I mean, partially it's seen that the committee that is running most of the nodes is quite linked to Binance and kind of selected by them themselves. But anyway, luckily they were able to stop the burn of the hack, although the hacker did manage to escape with about $100 million, converting them into other coins and taking them out of BSC chain before the network was frozen. But with the latest burn, and this is part of the mechanism that BNB token has, they have now burnt pretty much the total supply that was issued and created out of thin air by the hacker. So today's burn took about 2 million BNB, so 2,065,152.42 BNB tokens worth over $549 million at today's prices off of the market and taken out of circulation. And this is a comparison to the BNB chain, which netted the attacker exactly 2 million BNB conjured out of thin air using artificial withdrawal proofs. So that was worth $566 million. So that's part of why people buy BNB, is that it's not inflating. In fact, it's being burnt, it's deflating. So this kind of issuance out of nowhere was obviously disruptive to that investment thesis, or the main reason people buy BNB. So this has kind of resolved some of it somewhat. So I did want to share that with you guys. Thought it was interesting. Sup, Liam? Big dog. Gordrobat, thank you for joining as well. And Kevin, of course, from Lakeland. Tether announced that they have slashed their commercial paper to zero. So this is seen as kind of a risky kind of paper of bills issued by corporations that might not be the best thing to have backing your stable coin. Tether has been committed, as we've been covering over the months, to reducing that commercial paper to zero, and that has been finally finished, they said today, and they have instead replaced their commercial paper with U.S. Treasury bills, T-bills. As they said here, this announcement comes as part of Tether's ongoing efforts to increase transparency, which I think is being seen. They're looking a lot better to the crypto community overall. And less risky. With investor protection at the core of the management of Tether's reserves, reducing commercial paper to zero demonstrates Tether's commitment to backing its token with the most secure reserves in the market. This is a step towards even greater transparency and trust, not only for Tether, but for the entire stablecoin industry. Tether has led the industry in transparency, releasing attestations every 3 months, constantly reviewing the makeup of its reserves. Can't speak. In the last quarters, Tether reduced its exposure to commercial paper holdings constantly without any losses. On July 1st, the company shared an update on its progress in further reducing its commercial paper portfolio to a low of $3.5 billion. So that was this summer, which was on track with Tether's commitment to the community. On September 30th, so just over a month ago, or actually less than a month ago, the company announced it was below $50 million in commercial paper holdings, and now that has finally been brought down to zero. So you can see in the red here, their commercial paper holdings just falling away till today, and then you have their T-bills rising. It looks like from around maybe October of 2021 or November 2021 when they started adding more of those, perhaps, or that's at least when it rose over their holdings of the commercial paper. They're finally out of that game. So this is bringing a little bit more trust for sure to Tether and leading people to think they might not fail. But maybe that's what they want you to think. These are their attestations after all. What's up, Rocky T? Yo, what is up? Hey, Paul, a stream on Theta TV? Maybe one day. Maybe I will. I haven't done any sort of like stream with others in a while. So I don't know. I guess when I feel a little bit more ready for it. But yeah, it would be cool to come on Theta. Thanks, Paul. I appreciate that. And you're participating in support of the show always. So Jamie Dimon, this is being reported on U.Today, apparently came out and slammed Bitcoin yet again. This is the CEO of JP Morgan Chase. He was speaking at an institute of International Finance meeting in Washington earlier today when he slammed Bitcoin as dirty and expensive. He said that he will never buy cryptocurrencies. They don't actually do anything, he's convinced. I don't know why there's any value to that, despite Chase creating more products and commenting ever more on cryptocurrencies. Despite not being so interested in cryptocurrencies, he still has to comment on it. I believe there's no other critic besides Peter Schiff, who is quoted so much and is so relevant in a market that he just does not care about for some reason. But there you have it. Another critical comment by the CEO of JP Morgan Chase, who just, I guess, doesn't care to see the value. When the fiat system has served you so well, why bother, I suppose? In other news, Nvidia has apparently removed their hash rate limiter. Finally, after we can no longer mine Ethereum post-merge, they finally removed the hash rate limiter from their newest drivers, as it says here. Their Linux driver 520.56.06 and Windows driver 522.25, according to Timbers 007 on Ether Mining, wrote, do not seem to trigger LHR, a hash rate limiting that was put in by Nvidia to basically cripple graphics cards for miners as a way to look good for gamers when they just could not get their supply out there. So basically miners were being blamed for everything, for the supply crunch. To trigger LHR, so basically these new drivers do not trigger LHR when mining with traditionally locked algorithms like ETC hash and Autolyco. So if you are mining, for example, Ethereum Classic, this will be serving you. Not that it really matters with most mining software having unlocks built in already. They already basically removed this LHR hash rate limiting. But it's interesting that they finally let the whole thing go. The main benefit of this is to say that it's no longer necessary to run miners with root permission as an administrator when mining Ergo, Ethereum Classic, etc. It's about time. I guess just not enough people are buying these GPUs in order to mine those coins. Or perhaps finally Nvidia is able to produce more of these, and I guess some of their own bad PR that they've tried to deflect over to the miners is just not as relevant in the news, and they've stopped wasting time with this. But I remember it was quite a problem for me when I first got my 3080 and I was trying to mine Ethereum, and it was just it was severely crippled, and I had to eventually wait for software updates to come out for some of these miners to increase that hash rate, and it never really got up to the full potential of what it could have been. I guess I could have tweaked more, but I didn't really get that into it. It would have been nice to begin mining today, of course. And I did see also that apparently with this update, gamers are finding that they're having improved hash rates, although that could just be because it's a new driver update that already increased FPS, since LHR was not supposed to slow down games anyway. But anyway, I hope you guys have enjoyed the video. Not too much, but I did want to make sure to touch base with you guys today, and I'll leave you with the quote of the day. Hopefully it's enjoyable to you, by Bonnie Blair, speed skater. Winning does not always mean being first. Winning means you're doing better than you've done before. I encourage you to continue to strive for your own, reaching above your own bars whenever you can, of course. Take care, everyone. Much love, and stay cryptic. Peace.